Hey traders, Stephen Kowitzel here from tradersplan.com. Today I'm going to cover a simple and easy way to time the bottom in stocks, so stay tuned. Okay, so we're going to time the bottom in stocks today. I got my good friend Triple D 3D Systems. I have a love-hate relationship for this stock that I'm not going to get into right now, but it really has been in a nice downtrend for a very long time. You can see it was at $97. Now it's at $6. What I'm going to cover today is a weekly upside reversal, or at least that's what I call it, right? So what this is, and this is really, really easy to spot on the chart with just a little bit of practice. And if you're a trader or an investor and you're really looking to, buy a good stock at a good price, but you don't want to try to catch a falling knife, you want to wait for some kind of confirmation that a bottom has being put in, check this out. So you have this weekly upside reversal. Now what that is the weekly upside reversal, it is going to undercut the previous week's low and come back and finish in the upper part of the range, right, in above average volume. So you want it to undercut the low. We want to run out all the stops, right, from the previous week, flush out all the weak holders, and then you want it to finish in the upper end of the range, and it has to close above the prior week's close, okay? So it has to close above the prior week's close, undercut, and volume needs to come in, showing that there's really probably some institutions, probably not your mom and pops, probably really your institutions that are coming in, they're scooping up shares, they're trying to put a bottom in the stock. So you can see right here, we're in a massive downtrend from 97 to $6, and then boom, all of a sudden you have this weekly upside reversal. It undercuts the low, puts in, the volume comes into play, and then it goes from $6 all the way to 20, so it tripled. Now that's a pretty easy example, but I just really wanted to show you how powerful this strategy can be, especially if the stock has been in a downtrend for a very, very long time and you really like what they do or the numbers just look good. So not all of them work though, right? What you want to do is what you can do is you can scan for these types of setups on the weekly chart. You want your 10-week moving average, you want your 40-week moving average, and just have some volume bars, right? Because you want to make sure the volume is there. What you can do is you can scan on a Friday afternoon to see if any of these trades are potentially setting up from stocks on your watch list. Or you can just make it a part of your weekly routine to look and see if any of the stocks on your watch list have completed this pattern, and you can just place a trade at the open on Monday. Or if you catch it Friday afternoon, you're pretty confident and confirm that it's going to close above the prior week and all the other attributes are there, you can go ahead and make the purchase Friday afternoon. Always put the stop below the low, maybe just 1% below of that week's low, right? Because if it continues to go down and the trade setup doesn't work, you want to get stopped out. You don't want to ride that down. For example, a couple things you want to look at. You can see right here on this volume bar, this is a weekly upside reversal right here. But why it really failed, there are probably several reasons why it failed, but it finished in the middle of the weekly range. You can kind of see that candle. So maybe that's one reason why it failed, but a lot of times when you have this 10-week moving average, it's really going down, and it's been going down. It's in that 45-degree angle. You can see that there's clear resistance at this mark. So sometimes if that weekly upside reversal happens, it might try to bounce, find resistance at that line, and get pushed back down. Because you can see it happened right here, even though it didn't close in the upper end of the range. So maybe that's one reason why it failed, but it just trades sideways and you would have been stopped out. And then it happened again right here. And what happened was looked a lot better as it flushed it out. It really finished in the upper part of the range, but then it hit that resistance line and got pushed back down. So if you're a shorter term trader and you're looking for that 5 to 10% gains, you could always, make the purchase and then sell just a few points under that resistance line, under that 10-week moving average, because of the chance of it hitting resistance, are pretty decent, right? But again, this right here worked really, really well. You can see right down here, you go back a little bit further, you have this downtrend, and then boom, you got that weekly upside reversal, flushes out the previous week, closes in the upper range, and then goes from 27 bucks all the way to 97. So you have one massive upside reversal that worked right here. You have one right here. You have two small ones that failed right here. But again, I think one of the reasons it failed is because it finished in the middle of the range. So there wasn't quite that confirmation, that institutional stepping in to buying up the stock. So you would have got stopped out. So let's look at some other examples. Okay, so WebMD. Right here, if you can see down here, it really didn't happen down here. You can see one right here. It's in a downtrend. Again, you got flushed out right there, but you would have got stopped out, and then it just took off. But then right here, it pulls back. Boom, you got the weekly upside reversal right there. It goes up for a nice trade, pulls back again, weekly upside reversal. It goes off for a nice trade. And it happens again right here too. So you can, you can look at any chart on the weekly chart, you see these low points. A lot of time you'll see that weekly upside reversal. So you can see right here, you would have had a nice trade. And if you were a shorter term trader, you could have took some profits as it was meeting resistance, because on the weekly chart, it got rejected, right? It hit that blue line, it got rejected, but then it never really undercut the low. So if you're a longer term trader and you saw that rejection and you were sitting there holding your stop in place, you still would have been sitting very nicely. You'd have probably gotten in around 36, 37, and right now it's at 63, just from eyeing the chart. Just one simple pattern. If you were a shorter term trader, you probably would have took profits right around here. But again, you'll see this pattern for timing the bottom in stocks time and time again. It's really easy to spot. All you got to do is look at the low points. And you can see not every low point has these weekly upside reversals, right? But when you see it, if that's a stock or an investment that you want to take action on, go ahead and take that action. Just make sure you have your stop in place in case it goes against you. CRM is a stock that's been in the news a lot. It really, really looks good from a growth standpoint. But let's look at the bottom points. Look right here. Look at this massive, massive downtrend from 82 to 52. Boom, look at that flush out, right? It completely flushed out the previous week's candle, came back, finished in the upper end of the range. The volume is there, and then it just completely took off. So even if let's say you would have got it Monday morning, you'd have got in around 58.60, the stock's now at 83. It did it right here too. So it was in a downtrend. You had that weekly upside reversal, went from, let's say you got it Monday morning, went from about 70 to about 82, okay? Same thing right here. Look at this candle right here. It's in a downtrend, boom. It just flushes everybody out and then just takes off. So this is a pattern that I think that, especially if you like buying stocks at a really, really good price, this is a pattern that you need to pay attention to. Look, it happened right here too. It tried to really break out above 47. It failed. It looks like it failed at that price twice. So you got some sellers stepping in at 47, slammed it down, weekly upside reversal, takes off from about 40 bucks all the way up to 58 before it really starts to retrace again. Okay, so, and then boom, at the bottom it happened again. This is a good example because it happened a lot of times on this stock. Just a simple bottom timing strategy. XRS, this is a Chinese stock, but again, it's a really good example because you have this downtrend right here, then all of a sudden you spot the candle, it flushes out the previous week's low, finishes up in above average volume. Now you can see it hits that blue line, it rejects a little bit, but you had your stop in down here and then just pushes through it, has a massive uptrend, goes from really, if you were in around 31 bucks, goes from 31 to 48, now the stock's at 56.74. So I hope this was helpful at really helping you identify an easy pattern how to find the bottom in stocks. If you want to know some of my top enter and exit strategies in stocks and ETFs, stay tuned. Hey traders, this is Steven Kowitzel with thetradersplan.com. I hope you enjoyed my most recent video lesson. There's going to be many more to come. You know, I talk to traders all the time and they keep asking me the same thing. They say, Steven, I really need help timing when to get in a stock and when to get out of stock because I believe I'm losing money when I shouldn't be. So I designed and created the Savvy Trader course to really help you pinpoint with accuracy what is the best time to get in and out of a stock or an ETF that gives you the highest probability of success. And as a bonus video, I want to show you one quick trick. It's really, really easy to show you how to pick the exact bottom in a stock or an ETF. So click the button below or to the left or to the right of this video. I don't know where it's at. Just click it and get your free copy of the Savvy Trader course. I'll see you on the inside.